If you're planning to make your first serious real estate move in 2025, I've got news for you. Without the right research and preparation, you're setting yourself up for failure, plain and simple. The real estate market of 2025 isn't going to be forgiving to the unprepared. You can't just jump in with a handful of cash and expect to strike gold. To succeed, you need to arm yourself with the cutting-edge market insights. You also need to understand the shifting dynamics of property values, interest rates, rental trends, and you also need to know which areas are primed for growth and which are on the verge of decline. And here's the thing, most people won't put in the work. They're going to rely on outdated advice or just try to wing it. And that's exactly why they're going to fail while others thrive. My name is Preston, and I've seen firsthand what happens when you enter this market unprepared. 7 years ago, I made every single mistake in the book, but I learned, adapted, and now I'm sitting on 46 properties, generating $40,000 in monthly cash flow. For the next few minutes, I'm going to share with you the exact insights and strategies that you need not just to survive, but to dominate the 2025 real estate market. This isn't just some get-rich-quick scheme. It's about arming you with the knowledge to make you more informed and giving you more profitable decisions. So if you're serious about real estate investing and ready to do what it takes to succeed, then stick around. I can already hear you thinking,
okay, that's great and all, but have you seen the market lately? It's a roller coaster out there.
And I totally get it. The market's unpredictable, elections are coming, and it feels like walking on shifting sands. But here's a little secret. That uncertainty, it's your greatest ally. You see, while others are paralyzed by fear, waiting for that perfect moment to invest, savvy investors are already identifying these opportunities hiding in plain sight. So let me hit you with some data that might just change your perspective on the 2025 real estate landscape. According to CoreLogic's latest forecast, we're looking at a 3.9% year-over-year increase in home prices for Q4 2024. Now that might not sound earth-shattering, but consider this in the context of overall economic growth. Now here's where it gets really interesting. Mortgage rates have dropped to a 2-year low. And this is huge because it means properties are more affordable for investors like us, potentially increasing our cash flow and returns. And get this, the short-term rental market, particularly Airbnb, is absolutely booming. In Q2 of 2024, Airbnb's revenue skyrocketed to 11% year-over-year returns to a staggering $2.75 billion. Nights and experiences booked increased by 9% in the same period. This isn't just growth, it's a totally different shift in how people are choosing to travel and live. So what does this mean for you? It means that despite the uncertainties, there's still plenty of opportunity in the real estate market. The key is to knowing exactly where to look and how to position yourself. And that's exactly what we're going to explore next. Now that we've set the stage with the current market conditions, let's talk about where you might fit into this landscape. After all, real estate investing isn't just some one-size-fits-all. There are different types of investors, each with their own strategies and focus areas. In the real estate world, you got several types of investors. First are the residential investors. They focus on single-family homes, duplexes, small multifamily properties, etc. Then you have the commercial investors dealing with office buildings, retail spaces, and larger multifamily complexes. You also have the industrial investors targeting warehouses, manufacturing facilities, distribution centers, etc. You also have land developers buying raw land for future development or speculation. And here's the fact that might surprise you. In 2023, 20 to 25% of all homes purchased were retail investors like you and me. And yes, the big institutions like Blackstone are gobbling up properties, but regular folks like me and you are making big moves in real estate as well. Now let's talk about property types. We're seeing a lot of interest in single-family homes and also multifamily properties. And here's a pro tip that's gaining traction for 2025, and that's don't overlook mixed-use properties. These can offer multiple income streams and also reduce your vacancy risks. So imagine a building with retail on the ground floor and also apartments above. If one sector struggles, then the other one can help cushion the blow. And as we move into 2025, understanding these different investor types and property categories is crucial. It helps you identify where you fit in and what strategies might work best for you. But knowing the types of investments is just the start. The next big question is, how do you actually fund these investments? So what we're going to do now is discuss the financing options and understanding mortgages. And trust me, it's not as boring as it sounds. Financing is the fuel that powers your real estate investment strategies, and in 2025, we're seeing some fascinating shifts in the options available. Let's talk about the main financing strategies that are working in 2025. First up, we have the conventional mortgages, which is still the bread and butter for many investors, with down payments ranging from 5 to 20%. Now here's a tip. Some lenders are now offering conventional loans with as little as 3% down for first-time investors, so it's worth shopping around to different lenders. Next, we have the FHA loans that are perfect for first-time home buyers with down payments as low as 3.5%. The only catch is you're gonna have to live in one of the units if it's a multifamily property, but hey, house hacking is a great way to start, and that's exactly how I got started. You also have DSCR loans, which stands for debt service coverage ratio. These loans are based on the property's cash flow and not your personal income. That means you can potentially qualify for more properties even if your personal income doesn't support it on paper. We're also seeing a huge rise in seller financing and lease options. Don't be afraid to negotiate with sellers. Some of them are going to be willing to act as a bank, especially in slower markets. So of course, securing financing is just one piece of the puzzle. Once you have the property, how do you ensure that it's generating the best possible returns? And that's what we're going to talk about next, is the cash flow models and pricing strategies. Let's dive into the 3 main rental strategies that are working in 2025. First up are long-term rentals. These are your traditional year-long leases, and on average, they're cash flowing anywhere from $200 to $300 per month. It's not glamorous, but it's steady. And the key here is to focus on properties in areas with strong job growth and also limited new construction. This is going to create a supply-demand imbalance in your favor. Second are midterm rentals, and this is an often overlooked sweet spot. We're talking about furnished rentals anywhere from 1 to 6 months. These are perfect for traveling professionals, people in between homes, or even snowbirds. The beauty here is you can often charge a premium over long-term rates, but with less turnover than short-term rentals. And speaking of short-term rentals, number 3, think Airbnb. Stays less than 30 days on average. Short-term rentals can average $2,500 a month in cash flow across the US. And this sounds great, but remember, with higher reward comes higher risk and more work. You need to factor in higher turnover costs and potential seasonal fluctuations fluctuations and local regulations. Now let's get into the nitty gritty. How do you know if a deal is actually worth your hard-earned money? Here are 4 strategies and tips that you should keep in mind as you go into 2025. First up is the 1% rule. Your monthly rent should be at least 1% of the purchase price. It's not foolproof, but it's a great starting point. So for example, a $200,000 property should rent for at least $2,000 per month. In some markets, you might want to aim for a 0.7 to 0.8% rule. It's all about understanding your local market dynamics. The second metric you want to look at is your cash on cash return. You want to aim for at least 8 to 10%, anything less, and you might as well just stick your money into a high yield savings account or put it in the stock market. But don't just look at your year 1 projections, project at least 5 to 10 years out. You can also factor in potential rent increases and also increases in appreciation. You also want to look at market growth potential. You want to look for areas that have job growth, population increases, and also infrastructure development. You can use tools like citydata.com and also the US Bureau of Labor Statistics. The fourth thing you want to look for is value-added opportunities. The ability to force appreciate through strategic improvements is becoming increasingly important. So you're going to want to look for properties where you can add value through renovations, better management, or by solving a problem. Like for example, if you're using it as a short-term rental, they're using poor marketing strategies. And remember, it's not about the numbers on paper. You need to understand the story behind the numbers as well. A property might be the 1% rule, but if it's in an area with declining population or job losses, it could be a losing investment in the long run. Okay, now that we talked about how to make money, let's talk about everyone's favorite topic, and that's how to keep more of that money. So what we're going to do next is we're going to dive into the tax benefits of real estate investing, and trust me, this next section is going to save you thousands of dollars. The tax benefits of real estate can dramatically improve your overall returns, and they're often overlooked by investors. The first thing that we need to look at is depreciation. It lets you deduct the cost of buying and improving a property over time, typically 27.5 years for residential properties. This is like the IRS giving you a pat on the back for investing into real estate. Now here's a big pro tip. Look into cost segregation studies. These can allow you to accelerate depreciation on certain components of your property. And this is going to potentially save you thousands of dollars in taxes in the early years of ownership. The next thing I want to talk about are 1031 exchanges. This is a secret weapon that many real estate moguls use. What this does is allows you to defer capital gains taxes by reinvesting into a similar property. You always want to make sure that you work with a tax professional who's up to date with the latest rules. Number 3 is real estate professional status. This is one of the most powerful statuses that you can achieve. So what you need to do to qualify is number 1, you need to work at least 750 hours in your real estate related activities. And number 2, you also have to materially participate in the day-to-day operations. So if you have a full-time job, then you most likely won't qualify. But if you have a spouse that's a stay-at-home parent, then they can qualify as a real estate professional and offset your taxes as well. So essentially, you're going to deduct all your rental losses against your other income. But you want to make sure that you keep meticulous records because the IRS watches this closely. The next thing are home office deductions. With more people working remote, this often overlooked deduction can be valuable for real estate investors who can manage their properties from home. The key to maximizing these benefits is working with a tax professional who specializes in real estate. The tax code is complex and always changing, but if you have the right guidance, you can make it work in your favor. As we look into 2025, geographic diversification is becoming increasingly more important for real estate investors. Here are some of the top picks. So the first state is Texas. They take lease violations very seriously and have affordable markets with increasing demand. Number 2 is Indiana. This is one of the Midwest's best kept secrets. It offers an attractive price to rent ratio and also allows landlords to retain security deposits for up to 45 days. Indianapolis in particular is seeing strong job growth and has a robust rental market. Florida is another great one that has high population of renters and also laws that offer landlords more freedom. And also the absence of state income tax is another big draw for investors. Another one to look into is Georgia. Atlanta in particular is seeing strong job growth in tech and film industries. The state has relatively landlord-friendly laws and also a diverse economy. And remember, local laws can significantly impact your investment, so always do your due diligence before investing in a new area. It's honestly just like dating. You want to know what you're getting into before you commit. Here's some key factors that you want to consider. Number 1 is the eviction process and the timelines, rent control laws, security deposit limits, landlords' rights to enter the property, and also required disclosures to tenants. And pro tip, look into states that are actively passing laws to protect landlords' rights or improve the investment landscape. This can give you a first mover advantage in up-and-coming markets. And look, the best state for you depends on your investment goals, your risk tolerances, and also your management style. Because a hands-off investor might prioritize states with a strong property management industry, while a more hands-on investor might focus on nearby states for easier oversight. As we wrap this video up on the landscape of real estate investing, it's clear that there's plenty of opportunities for people that are prepared and informed. But knowledge without action is like a car without fuel. It's not going to get you anywhere. So let's talk about what you can do right now to start or accelerate your real estate investing journey. I know we covered a lot of ground here, but as we approach 2025, the real estate market is offering some exciting opportunities for investors. Whether you're just starting out or looking to expand your portfolio, now is the time to take action. If you're feeling energized and ready to jump into the world of real estate investing, particularly through Airbnb, I've got something special for you. My team and I have developed a program that can help you launch your first profitable Airbnb in as little as 90 days. Yes, you heard that right. 90 days to potentially life-changing income. Let me share with you some of the results that we've been able to achieve with people we worked with. We have Rob, who's a 33-year-old marketing director with a busy job and 2 kids. And despite his packed schedule, he managed to sign his first ever deal in under 3 months. And today he's pulling in over $100,000 per year while keeping his day job. We also have Jenna and Tyler, who's a couple from Boston. They beat out over 400 applications to secure their first property, and now they're generating $160,000 to $200,000 per year in annual revenue. Dustin hit the ground running and he got his first ever deal in 31 days, and that single property brought in $10,000 in his first 2 weeks. Now he has 5 properties and he surpassed his full-time job income. And these aren't just isolated success stories. We've helped people people from all walks of life, like teachers, engineers, salespeople, managers, and all these people we've helped launch thriving Airbnb businesses while juggling their existing commitments. And you're probably asking how we did it. Here's a glimpse into our approach. Number one, we've done the heavy lifting on market research for you. We know which areas are prime for Airbnb success. Number two, we provide you with a curated list of pre-vetted properties in high potential areas with landlords who are ready to sublease. Number three, you get access of our proven playbook, the same systems and strategies that have helped me generate over $500,000 per year. Number four, you're going to be part of a community of successful hosts, giving you instant access to a network of Airbnb experts. And this isn't just about advice, it's a complete system with ongoing support to fast track your success in the Airbnb market. So if you're ready to make 2025 your year to launch your Airbnb empire, here's what you can do next. Click the link in the description to schedule a strategy call with my team. During this call, we're going to create a roadmap for launching your first Airbnb in record time. Number two, we're going to identify any potential roadblocks and also strategize how to overcome them. And number three, we're going to develop a personalized action plan tailored to your specific goals and circumstances. Now, I know taking this first step can feel daunting, but remember, every single successful real estate investor started exactly where you are right now, and the difference is they took action. And finally, I want to hear from you. What's your next move? Are you ready to take the plunge into real estate investing in 2025? I want you to drop a comment below and let me know what action you're committing to taking in the next 30 days. Whether that's booking a strategy call, analyzing your first potential investment, or just simply diving deeper into market research, every step forward counts. If you found this video helpful, please do me a favor and smash that like button and also hit subscribe. It not only helps the channel grow, but also ensures that you don't miss out on future real estate investing tips and insights. And trust me, with the way that the market is evolving, you're going to want to stay in the loop. And remember, your financial freedom might be just one real estate deal away, whether that's through Airbnb or through another investment strategy that we discussed today. The most important thing is to get started. Thanks for watching, and we'll talk to you in the next video.